Good evening. Ira Epstein of Linn and Associates with your metal market wrap-up for this Wednesday. And we're now at the 17th of March, 2021 at 6:35 p.m. We bought a lot of new software to get our morning subscriber videos out earlier. The learning curve has been a disaster for me because I'm the one doing it at that hour, not the IT department. And I can only tell you, I feel bad. I'm sure you've all gone through learning new software, and it's hard. I should have it better tomorrow. I apologize to everybody, but it's going to be crystal clear, come out a lot earlier, and you'll see it tonight. We're using some of it actually in these videos as well. So now, let's talk about today, because it's not about what went on, it's about the FOMC meeting. It's not about economic data. The market came out with the data at 1, Fed Chair Powell at 1:30. The big question I was looking for to be asked was asked by Steve Leisman of CNBC, and he wanted to know the impact on the 10-year note and if the Fed's getting concerned about it, and the Fed chair did not answer the question. He didn't avoid it. He answered it in some way I didn't even understand. I think he avoided it personally, but whatever. But the reality is the Fed thinks the market's going to take care of it. The Fed wants inflation to get up near 2%. Their studies show that it should get there, should not overshoot it by that much. If it does, they have tools at that point to bring it out. The Fed is still going to keep the buying program. So what they said is they're dovish on the front end. They're letting the back end take care of what it has to. He liked when he was asked the questions, and they want to see the data, but they like the fact that the COVID relief bill is now the money going into the economy. They like that the vaccines are out there, the efficacy rates, the businesses are open. And he said, yes, we'll get a bump in inflation. However, eventually with the stores that closed and new ones opening and services that closed and new ones opening, that will get taken care of by the marketplace. He was thinking that that's how inflation will control itself. So it's the Goldilocks thing. It's the best of all worlds, in my opinion. You have economic growth. The Fed's not going to disturb it. It doesn't think it'll overshoot dramatically. He still is looking for growth this year, and that near a strong year, basically 4 to 6%. I still think will be where the numbers come in, and then taming down a little bit after that. But this pop is going to be strong. So that's what the market looked at. The metals jumped on the news. Now remember, they close at 12:30 in the metal markets. I shouldn't say close. Settlement time is 12:30 p.m. Central Time. They trade until 4 o'clock when they close. Well, that's an hour before the Fed chair press conference, and it's 30 minutes before the statement release. So they don't get to play that. On a night like tonight, the thing I look for is we get one reaction, Asians are sleeping, and European markets aren't open either. Just think of the time differences. So as they wake up in Asia, they start trading this. Sometimes we get the yin, and they decide it's a yang. So you're always got to be very careful as to the overnight reaction, and by the morning, it's out of the market, whatever it's going to do. So you can be up now, be down in the morning. Just be aware of that. It's not uncommon. When we step over to the gold market, you can see that the market's had a good bounce for the week. Now we're up $28. You're up 1.65. That's good. But you're still under the 18-week average of closes. That is the bearish part. So it's like, you know those shows that they do that on. When I look at the daily bar chart, well, I like the action. The market has the higher lows, higher highs. The market, as you can see, closed down on the day today, $3.80, but then it's up tonight, 20, because of how the market was trading during the day. Again, remember, you settle at that 12:30 time frame, and after that, that's the impact of the Fed. So remember that. The next thing is you're over the 18-day average of closes, so the bias is up. So just like yesterday, or is it? First time, not like any of those days. We have the higher low, higher high, over the 18-day average, which now, instead of the 18-day average of closes being a resistance point, it acts as a support point because you're over it. So I see the support coming in at 1731.80. The Bollinger Bands are not in play right now. They're far away. They could be if the market had a dramatic move, but they have a lot of narrowing in to do. And momentum is pointing up. So everything turned bullish today. Higher lows, higher highs. Now, the risk associated with being long is where would you break the pattern of higher lows and higher highs? That's 1696.60. This could be the area where traders, if they're buying, want to use those smaller size contracts to build positions and not take a total risk on your normal size trade. That's the first time we're trying to be bullish. The gold-silver ratio reacting a bit tonight. As you can see, during the day, it finished itself off at 66.28, and tonight it's 66.01. If you were to get back under that 18-day average, I could then start saying, well, silver looks like it's going to gain on gold. Silver in itself also turned bullish today on all the parts. Higher lows, higher highs. Until today's lows taken out now, I think the pros are going to buy that 18-day average in that 26.39 level. The risk is not small. That risk is almost 50 cents, right? It's actually closer to 40 cents. 60 cents. I'm wrong, my math. 40 and less 20. So that's a big risk. It's $3,000 a futures contract. So normally, that keeps me away from a market. I like risks that I can handle. $3,000 risk a contract is out of my league. It's probably in yours. It's out of mine. And I look at that, but again, some traders will use these mini contracts to test the water, see if it can hold. If it does, well, this whole area is loaded with resistance in here, right to wherever the Bollinger Bands are. Market's got to prove itself to me. In the copper, it's doing just what I had thought it would do. It's now hanging at this 18-day average every day. You've narrowed in the Bollinger Bands, probably about as narrow as they have to get. Momentum up, trend up, bias up. I think the pros are going to be nibbling in here. 404.05 would be the number you can't afford to take out. Now, it doesn't sound like it's far away, but from where you're at right now, that's 11 cents at $250 per cent. You're at $2,750. See, I can't do the math. In the platinum, the trend is turned up. Overbought. You got a 73.65 reading here, but higher lows, higher highs. So we've seen a change. That's the important thing to be looking at. Suddenly, we're not talking resistance points. We're saying, can the market hold a new uptrend? That's what we're doing at this point in time. In the palladium, you've got 3 days up and over that number, and these are the highest numbers we've had in a long time. Shortage? Probably. This is a pretty powerful market at this point in time. It's a son of a gun to catch. Remember, it washed everybody out and then went straight from 22.63 to 25.95. What changed? Not a lot. Just how the chart action is. Difficult markets. Now, tonight at 7, we're going to get an idea, another, 30 minutes or 20 minutes from here, if the dollar index can break through 91.34. You'll have a pattern of lower highs, then lower lows. You don't have that here. You have higher lows and lower highs. Any settlement under these two numbers can be bearish at 91.13. And the big question is, you just had a bullish crossover right here, where the 18 got over the 100, and you did not make a new high since then. Was that a trap? It could be. Support comes in on the breaks 91.13 to 91.22. I want to remind you again what I try to get for you here. You know, I write a lot. Besides these videos that I do, I have people that want to get my newsletters, my analysis on the market, and they're always short. You know, my favorite books to read when I was younger was the Reader's Digest. I wanted a synopsis. I took the Evelyn Wood reading courses. I'm a massive reader. I read all day. But I learned that when I'm reading other people's newsletters, they're full of verbose that I don't need. I want to get to the meat of it, write about it, and give you what you need. And I like to write using bullets, headlines, and it's all right there with the sentence summing everything up. I love doing that. So if you're interested in seeing what my newsletter does, because I cover the whole gamut of futures, That's how I do it. I'd like to offer it to you free for 2 weeks. You get to work with my trading reviews. I'll give you the videos that the subscribers pay for, the full research package. We'll even give you the charting software everybody gets, but it's 2 weeks only. If you'd like a free trial to it and you have not tried my free trials in the past 6 months or so, I'll be happy to give it to you. 866-973-2077 or go to our website www.iraepstein.com. You'll see the free offers. I'm Ira. You have a great day.